Welcome to your daily stock market summary from MarketSnap. Hey everyone, it's time to dive into the action from today's market, March 10th, 2026. We've got a lot to unpack with geopolitical tensions, economic uncertainties, and some standout moves in individual stocks. So grab a coffee and let's break down what matters most for us long-term investors while keeping an eye on the short-term waves. First up, let's talk about the major indexes. It's been a mixed day on Wall Street with a lot of volatility driven by news out of the Middle East. The Dow Jones slipped slightly, down a fraction of a percent, reflecting some caution among investors. The S&P 500 also dipped a bit, while the Nasdaq managed to hold flat, showing a tiny uptick thanks to resilience in tech. The Russell 2000, tracking smaller caps, took a small hit as risk-off sentiment lingers. Overall, the market's in a wait-and-see mode with conflicting signals about the Iran conflict potentially winding down. Speaking of that conflict, the ongoing situation in Iran is the big elephant in the room. Oil prices have been all over the place, swinging wildly after spiking earlier due to fears over supply disruptions in the Strait of Hormuz. President Trump's comments suggesting the war might end soon brought some relief, with Brent crude pulling back below key levels, but volatility remains high. For us long-term folks, this is a reminder to stay calm. Geopolitical shocks often create buying opportunities in U.S. stocks, as history shows. Short-term, though, higher gas prices and market jitters could pressure consumer spending, so keep an eye on how this unfolds. Now let's spotlight some winners today. On the large-cap front, we saw some impressive moves. Vertex Pharmaceuticals surged over 8% after announcing stellar trial results for a kidney disease drug. Talk about a confidence booster for healthcare investors. Micron Technology also jumped more than 3%, riding the wave of optimism in the chip space, especially with AI demand in focus. And Corning wasn't far behind, climbing nearly 6%, showing strength in tech-related materials. These gains highlight pockets of opportunity even in a shaky market, and for long-term investors, names like these could be worth a deeper look if they align with your portfolio goals. On the flip side, not everyone had a great day. Among the large-cap losers, AppLovin took a hit, dropping close to 8%, likely due to concerns over tech spending slowdowns. Intuit and ServiceNow also saw declines of over 4% each, reflecting broader pressure on software stocks. Waste Management slipped more than 4% as well, possibly tied to broader industrial sector weakness. For us long-term players, these dips might signal a chance to scoop up quality names at a discount. But patience is key. Wait for the dust to settle on these short-term headwinds. Looking at the market movers, Nvidia continues to dominate trading activity with a modest gain, holding strong as the AI narrative keeps investors hooked. Intel also saw heavy volume, popping over 2%, fueled by news of hitting full capacity amid the AI infrastructure boom. Tesla and Amazon were in the mix too, with slight upticks, showing that big tech remains a focal point even on uncertain days. These names are the pulse of the market right now, and for long-term strategies, they're often core holdings to weather volatility. Diving into the most active stocks by volume, NIO stole the show with a massive 15% jump, spurred by its first-ever quarterly profit, a huge milestone for the EV maker. SoFi Technologies and American Airlines saw high activity but faced downward pressure, reflecting mixed sentiment in financials and travel. These high-volume movers can be tempting for short-term trades, but as long-term investors, we're more interested in whether these shifts signal lasting trends or just noise. Shifting gears to earnings, it's a busy week with some heavy hitters reporting. Oracle and Hewlett-Packard Enterprise are in the spotlight today, with HPE already surpassing expectations thanks to a surge in networking sales. Tomorrow, we've got Casey's General Stores and United Natural Foods, which could give us clues on consumer trends. Later in the week, keep an eye on Adobe and Dick's Sporting Goods for insights into tech and retail health. These reports are critical for gauging economic strength, and for us long-term investors, they're a chance to assess whether our holdings are on solid ground. You can find exclusive earnings transcript summaries on MarketSnap. Let's zoom out a bit and check the top performers over the past week among large caps. Garmin led the pack with a stunning 21% gain, showing strength in consumer tech. Lumentum Holdings and AppLovin also posted double-digit gains, up around 15% each, highlighting momentum in tech and digital advertising. Shopify and Occidental Petroleum rounded out the list, benefiting from e-commerce and energy tailwinds. These weekly movers can point to sectors with staying power, something we long-term investors should note for potential portfolio additions. On the other end, some large caps struggled this week. Genuine Parts Company plummeted over 20%, likely tied to broader industrial concerns. Rivian and Blue Owl Capital each dropped more than 13%, reflecting EV and financial sector challenges. Okta and Bridge Biopharma also saw significant declines, showing how quickly sentiment can shift. For us, these pullbacks might be worth watching. Sometimes, a short-term stumble creates a long-term entry point. Wrapping up with sector performance over the past week, industrials topped the charts with a solid 2% gain, likely boosted by defense and infrastructure plays amid geopolitical noise. Consumer cyclical followed with a 1.6% rise, showing some resilience in discretionary spending. Energy, despite today's oil price swings, was up over 4% for the week, no surprise given the Middle East tensions. These sector trends are useful for us long-term investors to spot where capital is rotating and align our strategies accordingly. On the weaker side, healthcare lagged with a 0.6% drop over the week, possibly due to mixed signals in biotech and policy uncertainty. Utilities and financial services also underperformed, each slightly in the red, reflecting caution around interest rates and economic growth. While these sectors may face short-term pressure, they often hold defensive qualities that can stabilize a long-term portfolio during turbulent times. As we tie it all together, today's market reflects a broader uncertainty, with the Iran conflict casting a shadow over sentiment. But remember, as long-term investors, our focus is on the bigger picture, fundamentals over fear. Whether it's eyeing beaten-down sectors for value or sticking with growth leaders in tech, staying disciplined is our edge. Short-term volatility like today's can shake out weak hands, often leaving opportunities for those with patience. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stay engaged with our daily summaries and in-depth SWOT analyses to keep your investment game sharp. We'll see you tomorrow for more insights. Until then, invest smart and stay ahead of the curve.